What's up, boys and girls? It's your boy, Sean McLaughlin, at Options Sean on Twitter X. This is the All-Star Options Jam session for May 2nd, 2024. Hope you're doing well. I got back from a little respite with the family. I went to Redwoods National Park this past weekend, 4 days in the woods. It was amazing, refreshed, recharged, ready to tackle this tricky market that we're in. For those of you who are new here, the All-Star Options Jam session, what we do is we review any notable items amongst open positions that we have in the All-Star Options service. We review positions we've exited, whether for a profit or for a loss. We review any adjustments that have been made to open positions, all according to the plans that we have laid out. And we review updated stops on positions that are working for us, or at least going in the right direction, right? Some positions we update stops regularly, and we go through that here. And we'll also touch a little bit upon new trades that we've done since we last spoke. We do this every Thursday, usually at noon Eastern. Last week we did it a day early because of my trip. But hey, before we get into any charts here, I have to always drop this old disclaimer here that everything we discuss is for educational purposes only. I'm showing you what I'm doing with my money, and I hope that you learn something from following my process. So let's get into it here. Let's get into it here. Let's look at the big picture. I'm bringing up the S&P 500 chart. We've had, the correction that seems like everybody's been waiting for a while. Has the correction played itself out? I don't know. We'll see. The Fed happened yesterday. The market initially looked like it liked what the Fed had to say. Then it did the old rainbow of death coming into the close. So we'll see if the market has designs on going lower. We're kind of in a wait and see mode, right? I'm not in the mood here to be aggressively bearish by any means. I am in the mood to perhaps start dipping my toes in on the long side for positions that have the right setups. I'm being a little bit stricter in my parameters and what I'm looking for. Certainly don't want to be aggressively bullish here. We had done a bunch of delta neutral trades as of late, taking advantage of high options premiums. But as you'll see here, let me pull up the VIX. As you'll see here, VIX has fallen off a cliff over the last, let's call it nearly 10 trading days, or approximately 10 trading days. So there's not as much options premium out there. You can still find it in pockets, especially if something hasn't announced earnings yet, but you can find pockets of it. But generally speaking, a lot of the options premium, a lot of the fear has come out of the market over the last, call it 10 trading days. So I'm not aggressively or, hyper focused on finding delta neutral credit spread type trades, although I am open to them in the right situations. And we'll share one of them that we did in the last week. All right, let's jump into positions that we've exited since we last spoke last week. It's a mixed bag, a little bit of bad news, a little bit of good news. Nothing terribly bad. But let's start with the bad news first, right? Let's rip the Band-Aid off. Here's AOS. This is a trade that we had gotten into back on March 20th. We bought the July 95 calls and paid $1.75 for them. Well, unfortunately, it had an earnings report that the market did not appreciate, apparently, and it gapped down below our risk management level, which was 85. This trading day here, April 25th, we were far beyond that level. We exited our calls for 30 cents. Not a 100% loss, but most of it, we lost most of our premium. But I say this every episode. I'm a broken record when I say it, but when I put this position on, when I bought those 95 calls for $1.75, I sized that position in a way that if I lost 100%, I don't want to lose 100%, but if I did, it's fine. My rule of thumb is I don't like to risk more than 1% of my account equity in any one trade. Sometimes I'll risk as much as 2%, but that's pretty rare. Certainly not more than 2%. And so, suffering a loss like this, while it's no fun, it's just like any other loss if we're doing it right. Okay. So let's talk. We got AOS. Let's talk about the next one. The next loss was Riot. This one, boy, this one started out so great for us. This was a tactical kind of hit and run type trade. Me and Straza sniffed out at what we thought was a good opportunity for a quick little catch up trade. Unfortunately, the Bitcoin and the cryptocurrency space rolled over on us, and this stock here is highly correlated to Bitcoin and the cryptocurrency space, and so it suffered with the Bitcoin rollover. May 11 calls for 95 cents. The day we bought these, the stock immediately started ripping, which rarely happens, right? I mean, Steve Straz and I did a flow show on this trading day, and this was a Monday. We put the trade on and we talked about it live on the show when the options were trading around 90 cents. I got in at 95 and it soon started ripping. I think the stock was about $10 when we started talking about it. And it was for 3 days, it was looking great. We doubled our money at some point right about here. But the market had other plans for us. And I had 2 outs for this trade. One out was if it broke back below, I think it was $9, I think was our exit price. Doesn't matter. That was not what got us out. The other out was if our calls lost 50% of their value, and that did happen. I got out for 50 cents. They're trading lower than that now. Trying to just preserve my risk capital, right? That was my plan. If I lost 50%, I was out, and that happened. And so far, it looks like the right move because now we're in May. These were May expiration options. Whatever is left of the premium in these calls, as long as we're under our strike price, which is $11, if we're below $11, whatever's left of that premium is going to more and more rapidly decay as the days go by. So we closed the trade and we're out. That's it with the bad news. Some good news. VLO. Now you might look at this chart. If you ignore my circles, you might look at this chart and say, "Oh man, bad news. We suffered a loss." Actually, no. This was a very nice winner for us due to the plan that we had laid out in our blog post when we put this trade on over here back around early March. I think March 4th might have been the day we put it on. We bought long September 175 calls that we paid $4.50 for. All right. This thing, in the couple of days after we put the trade on, it really took off. This was looking like a fantastic trade. And part of the plan that we had was if and when Valero got to 175 a share, which is this level here, if and when we got to 175, we were going to take off a portion of our trade, at least enough to pay us back our original risk capital. I did that. I sold 1/3 of my position for $15.35 during this big green candle day right there. That $15.35 on 1/3 of my position more than covered my entire cost of this trade, of this investment, if you want to call it that. And so I had guaranteed profits locked in at that point. Not a lot of profits, but a guaranteed what? $1.50 guaranteed. And so we had a free ride after that. Again, this was all according to the plan we laid out in the blog post. Well, it looked like it was going to keep going and it was going to be a monster win for us, but the market has its own sense of humor. It soon after rolled over on us. And just yesterday, right? It was yesterday. Just yesterday, closed below our exit level. We closed the position to book our profit because we closed the remaining 2/3. But guess what? We got $7.20 for it. Remember, we had already paid ourselves back our original risk capital. So anything we sell the remainder for is pure profit. And this turned out to be a very nice trade. If you think about it, like if I bought one lots, right? If I just bought 3 contracts, sorry, not one lots. If I bought 3 contracts, let's keep the math simple. I paid $4.50 for them right here. I sold one of them for $15.35. That's more than triple what I paid. And then I sold the last 2 for $7.20, more than I paid there. So all in all, profitable trade, a nice profit, not the profit we were kind of hoping for back when we were up here and we were north of 175. Things were looking great, but still a very nice trade. And the profits in these 2 trade, the profits in this trade more than compensated us for the losses in AOS and Riot. And that's how it's done, guys and girls. our win rate on trades that we do here in All-Star Charts, and certainly on All-Star Options, our win rate is less than 50%. We win on less than 50% of our trades. But that's okay when your winning trades are significantly larger than your losing trades, meaning you earn a lot more in your winning trades than you lose in your losing trades. That math works out in your favor, and this is how it's done. You have to have these occasional large winners. Now, this is not, I wouldn't classify this trade as a big winner, okay? But it was a nice winner, and it certainly paid for the losses that we suffered in AOS and Riot. All right, so that's all of the trades that we've exited since we last spoke last week. Let's go through our updated stops now. This is a big part of what we do in no particular order. Here's FXI. This is the large cap China ETF. We bought this trade in tranches. One of the circles is kind of hidden here, but 1, 2, 3 is where we legged into this position. We wanted to buy them at $2, $1.75 and $1.50, and we got them. And now the trade is really starting to work out. We're long the January 26 calls. They're actually now in the money. This trade is looking great. We're now moving our stop up to 23.50. You can see it right here. This is our new stop. That corresponds with the recent pullback here. Probably next week, when we do this next week, I'll probably move my stop even higher, at least above this. This is a 50-day moving average right here. And it's, that would be a good place to have it because it would also be below the 200-day. But for now, I'm just letting this thing have some room because it looks like it's really starting to break out here. This is a great day today for this position. It's up the stock is up 4.7%. Looking good on FXI. But right now, for now, our stop has been updated to 23.50. Next up is Sea Limited. We got into this trade back here in February, late February. We're getting close. You'll notice this upper bound here. If we get to 65, I'm going to take some profits in this trade. And I know we've almost kissed that level a couple times. Perhaps I'm being a little stingy. I don't know, but I'm waiting for this thing to hit and or break through 65, at which point I'm going to sell half of my calls. Okay. The puts at this point are basically worthless. The June 35 puts this is a risk reversal. We sold the June 35 puts to pay for the 65 calls. All right. So actually what I will do is when we break 65, if we break 65, I'm going to sell half of my calls. I'm going to use those proceeds to cover all of the puts. The puts will be cheap. I mean, I think they'll probably be able to cover them for, under 25 cents, maybe 5 cents. Who knows? But I'm going to use those call proceeds to pay for that. And then I've locked in a guaranteed profit. Okay. And I still have half of my call position to ride this thing even higher. So that's the plan here with Sea Limited. But we are updating our stop to 55.50. I want to make sure this thing stays above 55.50. Any closing price below 55.50, I will exit the entire trade, both the call side and the put side, the whole thing. All right, next up, Google. This is a variation of a risk reversal. So Sea Limited was a risk reversal. So is Google. The difference being we protected this one. So we still sold puts that help pay for the calls, but we reduced the price of the calls by selling further out of the money calls against it. And we purchased further out of the money puts to define our risk. All right. So basically we sold a put spread and purchased a call spread. That's what we got going on here. We had a great reaction after earnings, a big gap. It's unfortunately, I've been coming back and trading back. Not what I want to see, but we're still sitting in nice profits in this trade. It's working very well for us. I'm hoping it kind of finds some support here, and maybe we could, and maybe next week start moving our stop up here around 162, 163. We will see. But for now, we're moving our stop to 150. That 150 level kind of corresponds with some support here that lasted for several weeks, and it's also right up above the that rising 50-day moving average. So for now, our stop is at 150. This Google trade is working for us. It's looking good. Let's just hope it doesn't want to come and fill this gap all the way. That would be a bummer. That would eat into our profits. Okay, next up, Wells Fargo. This is a trade we got into in late January. We bought the January 60 calls, so we had basically 12 months to expiration when we got into this trade. We bought the January 60 calls for $1.75. The trade is going our way. It's we're sitting in some nice profits in this trade. We actually sold a third of our position again, according to our plan that we laid out in the blog post when we put the trade on. Selling a third of our position here paid us back all of our original investments. So now we're free riding here on Wells Fargo. So whatever we end up selling the remainder of the position for, that represents pure profits. We have 2/3 of the position still on. Whatever we get for it, pure profit. But for now, we're moving our stop to 57.50. As long as Wells Fargo can stay above 57.50, this trade is still valid and we'll still keep holding these calls. All right, two more. Next up is Amphenol, ticker APH. This is a electrical company of some kind. I forget exactly what they do. We're long the July 120 calls. We paid $1.64. Got into it over here back in February 26th, I believe. And the trade is going our way. It's been a little bit of a rocky ride, but so far so good. I like the way this is trending. We're moving our stop up to 113, corresponds with a 50-period moving average right there. 113 is the new stop in APH. And finally, FCX. Speaking of roller coasters, boy, has this thing been a roller coaster. We got into this back on right in here, April 1st. We entered a May-January call calendar spread. We paid $365 for it. That was the most we could lose when we put the trade on. According to the plan, I'm going to keep rolling the short calls for additional credit whenever I can, whenever the short calls are trading for less than 25 cents. That's my signal to roll them out and bring in additional credit. We had an opportunity to do that here on April 23rd. The May calls were trading for below 25 cents. So I closed them and reestablished new short calls in June. And I got a 45-cent credit for that roll. So the nice thing is now, we originally paid $365. We brought in a 45-cent credit, which reduces our risk now. So now we only have $3.20 of risk. The most we could lose now is $3.20, thanks to this additional credit. And with the stock rolling over again, maybe we'll get a chance to roll June into July, but probably not for a little while. We probably need a couple more weeks for that to play out. Anyway, regardless of what position I have on, whether I'm in the June short calls or maybe I've rolled to July, regardless, for now, our new stop is at 41. And if we break 41, if FCX closes below $41 a share, I'm going to close the entire position. Whatever I've got on, I'll be out. At that point, the trend has been invalidated to me. The trend I'm playing for has been broken, at least on my time frame. So I will want out of the position. But right now, 47 is the new stop, which, let me remind you guys, a lot of these stops, most of these stops, especially if they're chart-based stops, I always will wait for the closing price. I want to see the stock close below my trigger. And if it does, then the next morning, sometime in the first 30 minutes of the trading day, typically, I will exit the position to take it off. Unless, of course, it has an overnight gap in our favor, right? And speaking of overnight gaps, let's talk about, I'm going to go off script here. Let's talk about this CVNA real quick. I have no position here, but I know some of you do, because we did have a trade in CVNA Carvana recently. We got in, I don't know, somewhere around here, early April. And our bet was that this is a heavily shorted name. And, heavily shorted names in a bull market, those things could be ripe for extreme squeezes. And so that was the bet we were making. The problem is we had a plan. We had a risk management plan. All right. And we have to stick to our risk management plan. And during this little pullback right in here, it closed below our stop loss level. And according to my plan, I have to get out. Risk management is job number one. Okay. It broke below my level and I had to close. Now, let's say I ignored my plan, right? I said, no, I got a really good feeling about this thing. I'm going to hold on to it. I'm going to, ride or die situation, right? Well, if I held on, we would have gotten to here, and on May 1st, which was yesterday, we are now in the expiration month. I was holding May 125 calls, by the way. I maybe should have said that at the top. My best practice when I'm holding an options position is when I get into the expiration month, in this case, May 1st, when I get into the expiration month, if my calls are out of the money, I want out because now the clock is ticking. Whatever premium is left in those calls, that premium is going to begin to more rapidly decay every day as I get closer to expiration. And so even if I had ignored my rules or broken my rules or just was negligent in executing my plan and just didn't get out for whatever reason, and I was still holding on May 1st, I would have exited this trade yesterday. And you know what? I would have been furious about it today, saying, oh, if I just held for one more day, I'd be sitting in fat profits. Well, that didn't happen, but either way, I'm out of this trade. And it's a bummer. It's a bummer to see a trade do exactly what you thought it was going to do, but it doesn't do it on your time frame. That's one of the challenges of options trading, right? It's not just about getting the direction right and having the proper trade structure on. You also have to have timing, right? You could buy a stock and sit on it for a lifetime. Warren Buffett is famous for that, right? Options positions, you can't do that. There is an expiration date. You might have an expiration date far off into the future, but eventually that expiration date comes. So options are always, time is always a factor in our trades. And unfortunately, we got stopped out of Carvana. And listen, some of you, I talked about this on the morning show this morning, so I apologize if I'm repeating myself to some of you, but I know there's some of you who were in this trade with us and you were still in it and you're still in it now. And you're sitting on a nice fat gain. And you know what? Congrats. That's awesome. I'm very happy for you. But I just want you to know that you're being rewarded for bad behavior, right? You had a plan, you didn't stick to it, but you made money. Great. You made money. Nothing wrong with that. Just make sure you're not learning the wrong lessons here. The lesson being, oh, I could go with my gut and ignore my plan that I carefully put together before I put the trade on, or the plan that I carefully accepted when I put the trade on, right? That plan existed for a reason. And the only time that we're unemotional about any trade is before you put it on. Once a trade is on, once you've got real money at risk, emotions take over. I don't care who you are. I don't care how much of a robot you are. Emotions take over and we're not thinking straight. So you got to stick to the plan that you put together before you put the trade on. Unfortunately, that got us out of Carvana. All right, moving on. Last thing, real quick, I'm going to talk about the new trades that we've put on since we last spoke. There's 3 of them. I'm not going to get into the details specifically of each trade. If you want the details of these trades, you can find them at allstarcharts.com. Go to the members section, go to the options section. You will find detailed trading plans for every one of these trades that we put on, why we like this setup, how we're trading it, what structure we're using, what option strategy we're using, where our risk management levels are, how we're getting out of losing trades, and where we may take profits if we take profits at all. All of those details are laid out in every trading plan. So please head to allstarcharts.com to find that. If you don't have access to that, please email us info@allstarcharts.com and we will get you hooked up. Anyway, with that preamble out of the way, the 3 trades we've put on since we last spoke, NVIDIA is the first one. We put a delta neutral trade on in NVIDIA. We just kind of betting on some sideways action there. Keeping with that theme, we also did a delta neutral trade in GDXJ. This is the junior gold miners. We think that this thing is in for some more sideways action. And lastly, JD.com. We put on a bullish bet here. We think that this Chinese internet name, a lot of things in China right now are starting to get all bulled up, so to speak. And we think this is one of those names that can lead the way. And I mean, as you can see by today's trading action, it certainly is. But we are in a bullish trade in JD.com. Again, find those details at allstarcharts.com. Let me check the chat real quick, see if there's any questions here I have not seen. I see a couple of you guys are in the VLO trade, made some money. That's great. Let's see. Yeah, Yako, as you can see, we're in the GDX trade. Eisenhower said plans are worthless, but planning is everything. And I agree 100%. Jess Wald says, or asks, Sean, what's your reason for setting stops above the 50-day moving average? That's a good question. Listen, the 50-day moving average is not the end all be all for me for stops. Most of the time when I put a stop in place, it's based on a chart pattern. I set my stop below an obvious level of significant support. That's my first place I'm looking. If there is not a nearby level of support and the 50-day moving average is kind of up above, like maybe it's a stock that's just it's just skyrocketing up, right? It's going up. There's really no obvious level of support. Let me see if I could let me see if I have a good example of that. These are our open positions here. Maybe this would work better if I had a chart. Is this one? Okay, this is a good one. Wells Fargo. Wells Fargo since November has been basically, with a few exceptions, it's been mostly 45-degree angle up and to the right. Okay. Now, if I'm looking at this chart right here, I could use this level here, this 59.50 as a level of support, but that's pretty tight for me as a swing trader. And I got options that don't expire till January. I don't need to be that tight. If I was looking at this chart, I would say, well, probably right here at 55, let's call it 55 would be an obvious level of support, right? We had a little base. The low end of the base was right there around 55. That would be a good level of support. However, I'm looking at this 50-period moving average, and it's higher than that less level of obvious support that I want to use. So in that case, I will choose the 50-period moving average versus the chart level. But in most cases, the chart level where I see levels of support, that is the key thing I'm looking for. But 50-day moving average just kind of helps. Let's see. Do you ever roll trending or profitable positions as a way of taking profits? Adam, great question. It's not something I do, at least in all-star options. Sometimes in my personal trades, I will do that. Like if I'm in a position and it's working well for me and I'm getting close to expiration, but I think like it still has a lot more room to run. Nothing wrong with closing those calls. Like I say, it's a simple long call position, right? Nothing wrong with closing the calls you're in and then using the proceeds to buy a further dated option just to keep the dream alive, keep the trade alive for a few more months. Nothing wrong with that. I don't do a whole lot of that though, Adam. I really just kind of put the trade on and ride whatever it's got for me and ride it till the end, and then that's it. And then, maybe if I want to get in again, I'll just kind of treat it as a brand new trade with all brand new risk management. But I know a lot of people that do that, Adam, and there's nothing wrong with that. The thing about options trading that's both amazing and frustrating to people is that there's no one right way to do anything. Okay. There's no perfect answer. There's no perfect trade. There's no perfect expiration month you should use. There's no perfect strategy to employ. Every choice that you make in options, there's a pro and a con. There's no right answer. But the good thing about that is that there's lots of opportunities to be right? A lot of different ways to skin a cat. We could all participate in the same trade and do it in different ways and all make money in different ways. I like that. Some people find that frustrating. All right, guys, just to recap, let's go real quick. I got this little updated stops slide for you guys. Just to recap, these are the 6 positions that we updated stops in. If you want to pause the video and take a screenshot of this to help you out, by all means, please do. But those are the 6 positions we updated stops in this week. All right. As always, if you have questions, hit me up, info@allstarcharts.com. If you want access to All-Star Charts research and All-Star options trade plans, hit us up. We'd love to get you involved. Join our community. We have a live chat room. All of our customers have access to it. They can engage with me. They can engage with each other, bounce ideas around, get feedback, get moral support if you need it. It's all there. It's a great little community, getting better as the months go by. All right, folks, this has been fun. We'll do it again next Thursday at noon Eastern. Until then, have a great rest of your week. Have a great weekend, and we'll see you next week. Bye-bye.